Welcome to Forex School Uganda. I am Godfrey, and today we are going to be looking at gold, that's XAUUSD, to see where it is right now and where we anticipate price to be getting to in the next coming few hours, days, weeks, and perhaps even months. Now, if you're new to the channel, kindly subscribe, like, and share the video so I can continue bringing you value on the channel. We are going to be doing a top-down analysis, breaking down market structure to see which areas we could actually be looking to for possible trades to the setups that we look for in the market that suit our entry criteria show up. Come with me to the charts. So this is the monthly time frame, and we can clearly see that momentum is heavily bullish. So we'll drop down to the weekly. Now what we see on the weekly is that price is creating the impulse correction, impulse formation with this move to the upside. That was the impulsive move. Then we had this correction to the downside, and now market seems to be creating another impulsive move to the upside to complete the impulse correction, impulse formation in the market. If we take our Fibonacci tool to measure the distance covered by price, both on its way to the upside and the amount of retracement to recover part of the impulsive move to the upside, we see clearly that price tested and rejected the 50% retracement area. It pricked a little below it, but was held to the upside, and price was able to close the week bullish. So as it stands now, what we expect is price to continue to the upside after this impulsive move to the upside and this correction, and now we are seemingly in this impulsive leg, just at the beginning of this impulsive leg to the upside. Now if I take my Fibonacci tool and now this time measure from the beginning of this current leg that seems to be in formation currently to the peak of the previous impulsive move, you will notice that the minus 27% Fibonacci area is way up here, and so this is the area we'll be targeting price to get to as it moves on the next leg to the upside. So it's clearly bullish, and we expect bullish moves to come to this area on this next leg that price is beginning to form to the upside. Now dropping to the daily, looking at the daily, we see that price broke and closed above this resistance area. It then came and tested this resistance area to the upside, and we see that it was rejected with the candle closing with a long rejection wick to the upside. Now this indicates rejection of prices within this area, and we could see a small reversal, or rather a retracement back to the downside to come and retest this support area before another potential move to the upside to complete what we've seen on the weekly as the beginning of the completion of the impulse correction and impulse move to the upside. And if we take our Fibonacci tool and measure from the beginning of this impulse leg to the peak of it, we see that should price retrace to the downside, we see that we have the 50% Fibonacci retracement level and the 61.8% golden ratios within the confluence of this support area, and so that could act as a strong magnet to see price pulled back to this area before we can see a move to the upside. Now when you look closely, you will see that price has been rejected here, rejected here again before it finally broke down below it, but it then moved back, retracing to retest this area, and was rejected again at the same area, tried to come back up was rejected at this area before finally breaking and closing above it. Now, should we have another retracement, we could see price rejected in this area and bounced off to the upside, because this is a very strong support and resistance area. So as it stands now, we expect some rejections within this area, which we see from the rejection of this candle while it was breaking above it, causing it to close with a long rejection wick on the upside. And with these rejections, we could see a minor retracement back to this support area, and right from here we would likely see a push back to the upside to complete the impulse correction, impulsive move to the upside. Now we'll drop down to the 4 hour to do our analysis within there to see how we can position ourselves to take advantage of what retracement might come, so we can take some intraday trades and some scalps as well. So this is our 4 hour time frame, and this is the area of support that we marked out on the daily time frame. And what we see is price with this bearish move and bullish move created an area of support beneath them, and we see that now price has broken and closed below this support area to the downside. And what we could expect is price to continue to the downside to this area before a further move to the upside, or we could see price retrace to retest this area of support now turned resistance. And once it is held within this area, we will likely see a drop to this area before a bounce off to continue to the upside to complete the impulse correction, impulse move to the upside that we have seen currently in formation on the weekly time frame. But should price in this area break above this resistance area, we will position ourselves in the lower time frame to take advantage of whatever setups it might give us within this area here, and look to drive it to the upside. But the reason why we believe we could see a drop to the downside first before we have that push to the upside is because of what we see, not only with the structure of the market at the moment as we have analyzed it, but also from what we get from the commitment of traders data. Now, this is the commitment of traders data, and what we see is that the previous release of the data had a figure of longs at 278,000 longs, but the latest figure is 272,000 longs, which is a negative difference of minus 6,700 positions. Now that means that 6,700 long positions were closed out during the week. And when we look at the shorts, we see the previous figure was 74,600, and the latest release has 72,000, which is a negative difference of 2,063 short positions that were closed out during the week of the release. Now, comparing the number of longs that were closed to the number of shorts that were closed, we clearly see that the long positions are much more than the short positions that were closed. Now, that indicates that the short-term sentiments are bearish, and that's why we could see a retracement to the downside to retest the support area that we have marked out before we can see further moves to the upside. If you look in this column here, and I'm interested in these two last figures, you see the open interest in the previous release was 519,000, and the latest release has 529,000, which is an increase in open interest by over 10,000. That tells us that these big boys, which is mainly banks and hedge funds, have an interest in taking loans, and so the bias long term is bullish. But short term, we could see a small retracement informed by the long positions that were closed being more than the short positions that were closed, which indicates to us that we could see a move to the downside first before a further move to the upside to complete this impulse correction, impulse formation in the market. So what we'll be doing is positioning ourselves in the lower time frames to time these shifts early on in the market so we can take advantage of them to make profits in the market. So we'll see how the week will play out. Remember to subscribe, like, and share the video as well so I can continue bringing you valuable content on the channel.